This
Michelle.
conference will now be recorded.
Okay. Thank you for those kind words, Brendan. My name is Michelle, and I'm with First Home Bank. My bank's actually based out of St. Petersburg, Florida, but I am here locally in the lovely city of Overland Park, Kansas. So I've been in SBA lending now for about 10 years and banking for 12. And I guess Jason and I go way back. Jason will probably say, the SBA bug bit us, and we definitely jumped all in. And, honestly, I don't know that I could ever go back to doing regular conventional lending again. I think that I'm going to be doing SBA lending for the rest of my life. I believe that the SBA program, it's important because it really does help businesses achieve capital, like Jason was saying earlier. It really does help you grow your business, buy a business, restructure debt. We'll talk about that a little bit. There's a lot of tools within the SBA bucket to really help you move your business forward. And so that's one of the reasons that I have chosen this profession, and I remain in this profession. I love helping small businesses. I love finding the pain points, and I love finding the solutions for them. So that's a little bit about me.
Fantastic. All right, so let's kick this off. Michelle, would you give kind of a highlight of what you saw at a very high level with this most recent stimulus package? And then just to let everybody know, she's going to be diving in. We're going to start with high level, and then there are some very specific questions that I had already put together just based on what I'm hearing. And then as you have questions also, please chat them in, because you will have questions. There is so much information that's out there. And I'm just going to preface this by saying Michelle's been doing a good job on keeping up with something that is a moving target. So I think trying to get a lot of this information is kind of like trying to nail Jello to a wall. It's just all over the place. So let me give a disclaimer right now. I'm going to throw it out there, and she's going to do it several times as well, that the information that she shares today could be different tomorrow, and it could be different next week. So that is part of the reason why I am introducing you to someone like Michelle, that is a resource that is staying on top of this every day with what's happening. And building a relationship with your banker is one of the most critical relationships that you have for business success right now. So Michelle, take it away with a highlight of the program first.
Yeah, I tried to break it down into kind of some sections. And so I'm going to start with what the top 5 highlights of the recent stimulus package is. I'll start with the most popular, the lovely PPP, Paycheck Protection Program, loan program. $284.45 billion was allocated to that program. So that's out of this CARES Act, out of what was signed recently. That's what was allocated for PPP. It's going to be available for new clients, and it's also available for round 2. So if you received a PPP loan prior, you can apply for a second PPP loan in this go around. $15 billion was allocated to the Shuttered Venue Operator Grant Program. These are available for promoters, theaters, performing arts operators, nonprofit museums, and several that are in that arena. It's going to be very NAICS code driven. It's going to be driven by whatever the number is that identifies your business industry. $20 billion was allocated to new EIDL programs, EIDL grants. So that's the Economic Disaster Loan Program. $25 million was allocated towards minority business development agencies, minority business development centers. We actually have one of those here in Kansas City with AltCap. They were unable to join today, but that's one of those centers that does lend into the urban core and does have a focus on lending to minorities. And then the 5th highlight I threw in here is a big one for UCPAs in the room. The CARES Act did allow for the expansion of the employee retention tax credit. So you must have a 20% or greater decline in business, and then it goes from basically approximately 5,000 per employee to 10,000 employee. This is a big deal. And the bigger issue here is that you can claim both your PPP loan and the tax credit. You can claim them both now. Prior to how it was written, you would not be able to claim both. So that was a big change in what came out in this CARES Act. Why is this relevant right now? It's relevant because cash flow is king. Cash flow is important, and we're still in the middle of a pandemic. And for a small business owner, the more cash that you can retain, the more options you have, the more you can flip, the more you can change, the more you can make an addition or a subtraction to your business that helps you move forward. And so all of these programs in some form or fashion really gives you access to capital and maybe helps you better control your cash flow scenario.
And that's one of the things I do want to actually take a step back here for just a second away from the SBA and talk about some strategies that businesses should be using right now to maximize cash flow. And what I'd love is just your perspective on this, and what are some of the things that as business owners we should be looking to improve that right now.
Yeah, I think the number one way to increase cash flow is to increase revenues and reduce expenses, right? Top number bigger, smaller number, bottom number smaller. So with that, though, I think that's everybody's goal in business. So I think I'm stating the obvious there. I will say probably the number one way, and I think Jason and Pat, you'll probably chime in and agree with me on this, but really a key way to increase cash flow is to restructure your debt. We have a lot of companies out there right now. When you look at the balance sheet, they might be on a short amortization. They might have taken out a loan that maybe was not so friendly. And just the ability to be able to restructure that debt into, a 7A SBA loan, working capital note, or a restructured debt, it basically allows us to stretch that debt over 10 years, thereby reducing payments, thereby increasing cash flow. So, there are a lot of programs right now, and I'll get into some benefits of SBA down the road, but really restructuring debt is a key way to basically, help you improve cash flow. Another way to improve cash flow would be just to obtain new capital. I mean, obviously any kind of injection in capital is going to obviously help your situation. I talked about alt cap earlier. With the minority lending program that they have, that's a way to do it, as well as through the EIDL grants as well.
So I want to throw in a question here, Michelle. So
Mm-hmm.
I know that probably as a business owner, and I mean, I'm getting so many of these emails just blasting me with all of these different ways that you can obtain capital in your business right now. And, it seems like everybody's got easy money and everybody's got cheap money. But somebody sent me something the other day that I got to looking at, and some of the terms and conditions in the fine print, it sounded almost like payday lending kind of stuff. So
yeah, we in the business, we kind of consider that to be predatory lending. Cabbage, Capital Direct, Swift, these are all common fintech names. The fintech game has gotten very competitive, and basically they've got artificial intelligence that weeds through your emails and weeds through your searches and knows that somehow you tell somebody that you need money, and all of a sudden this magic email appears in your email, and it says, hey, we can have money to you tomorrow. And they truly can. You filled an online application, the next thing you know, boom, $100,000 dropped into your account the next day. All is great until they start going in on a daily or weekly basis and pulling money back out at a very high interest rate. So I would say before you ever take any of that easy cash, contact your banker, see what programs are out there, see what's available. Pat's nodding her head up and down. She knows this. Call Pat, call Jason, call Valerie, call myself. Find out what's out there. Call Mark. Because there are better programs out there, and just because it's easy doesn't mean it's the right way to go.
Well, and we will make sure. So in the information about this post, as far as the invitation, what I would love to do is if you are a capital resource, I would love for you to go in and put in a comment and share information about who you are and who you serve in that LinkedIn post. And then also I will make sure that we have the information from AltCap. And Pat, I would love for you to share your information as well around being a resource for PPP, because the more we can put stuff into one central spot where it's easy for all of us to go back and find it, that's one of the benefits of doing these presentations and having conversations like this, is I don't want to have to remember all the details of this, and it will be so helpful to go back and look, and it's all in one spot. and it stays there for quite some time on LinkedIn. And this information, I promise you, just about everybody's going to be referencing back to something that was discussed today. Okay, so can you talk a little bit more about some of the SBA programs and the EIDL grants and EIDL loans?
Yes, so I'm going to start with the EIDL grants first, and obviously we've got quite a big allocation there. Again, 20 billion has been allocated for these EIDL grants and EIDL loans. And so if you did apply and receive for round one of EIDL, you can apply for a second EIDL, and you can get grants on the second EIDL as well. There's two programs. If the SBA approves you for an EIDL grant, you apply and money just shows up in your account. If you don't sign a loan document with the SBA, you got an EIDL grant. If you do sign a loan agreement with the SBA, it's going to be a higher dollar amount than what they are offering with grants. You will sign a loan term with them, a loan document, and basically it's a 30-year loan, 30-year amortization at 3.75%. Extremely reasonable terms. So very reasonable. That's your cheapest money out there right now is your EIDL loan for sure. Just so you know, your bankers can't help you with your EIDL loans. Pat had mentioned she can, but that is administered directly by the SBA. So you do work directly with SBA representatives to fund those requests. Within the SBA program and the bank programs, I'm going to focus primarily on the 7A program, but these would apply to both the 504 and the Express as well. But a couple of big changes with the 7A program is that they've dropped the guarantee fee. So effective February 1, and I believe it runs until the end of September, which is the end of the fiscal year for the SBA, basically there will be no guarantee fees. So when you used to apply for a loan, a part of what the guarantee fee was rolled into the loan, and it's basically 3 to 3.75% of 75% of the loan. It's kind of a crazy calculation, but you would pay that, and that would be rolled into the loan. And that's a part of what the SBA uses to kind of fund their program. So that the program is really self-sufficient when it's when we're not operating in a pandemic. So that is what that guarantee fee was. That has been waived, and that's significant. The other big change, a couple of big changes as well, is that effective February 1, if you take out a new note with the SBA will make your first 6 months payments. I'm getting verification on 6 months. I've seen some records say 3, but I know it's at least 3, but I believe it's 6 months. So having your payment made for the first 6 months, that's a big deal. The third big change is really more beneficial to the banks, but it ends up being beneficial to you because what is happening is the SBA has raised the guarantee fee from 75% to 90%, meaning that the banks have a higher guarantee should the loan go into default of getting repaid by the SBA. The reason that's important to you and your clients is because it basically entices the banks to maybe do more lending. So again, with the higher guarantee, the idea is that the government says, okay, we want banks to continue lending. We want to promote their lending. So let's give them a higher guarantee so they'll do more loans. So the credit guys, of course, love having more guarantee to kind of shore up the loan, if you will. So those are three key areas that I think that make SBA lending more attractive than it has in the past. One other thing I want to say is that in the past, I think some people have looked at SBA lending and thought, I don't want to go the SBA route. That doesn't appeal to me. Well, those clients that had SBA loans last year had 6 months of payments made by the SBA. So, the SBA program has been very beneficial to small business for the past 12 months.
And isn't that up to, that's a pretty significant dollar amount that they're paying. Isn't it up to, I don't know,
up to,
8 or 9,000?
Yeah, it's up to $9,000. So,
and that's per month, right? Not total, but per month?
Per month, correct.
Yeah. So those are some pretty significant numbers, and that's not a deferment to the end of the loan. It's they're making that payment for you.
Correct. It's as simple as basically your bank you shouldn't even have to know that it's happening, except that your bank sends you a notification to say, hey, guess what? Your payment's being made right now. No deferment, It goes towards P&I, and at the end of 6 months, your payments resume. It's like turning off your ACH, turning your ACH back on when the payments resume.
Wow. Okay, so now let's talk about under the new SBA PPP loan. What are some of the okay, so let me throw out a disclaimer here, and I want to do this, Michelle, for you, because what I'm going to ask you to do is talk about what are some of the criteria that make you eligible for some of the new PPP loans. There is no way, shape, or form that I am obligating Michelle to secure funding under any of the criteria that she is stating. So all of these are so individually based, but please share guidelines of what you're seeing on eligible businesses for the second round of PPP.
Yes, and under the new PPP program, again, it's round 2. Couple things. So you must have been in operation by February 15th of 2020. And I'm going to say, sadly, what we have not seen is a provision for those that opened just after February 15th of 2020. I had some clients that opened up in, March 1st. They're kind of left out in the cold right now, the way that the rules have come out today. But if you're in operation by February 15, 2020, you're good. You must be open and operational today. So if you shut your doors, you cannot come back and ask for a PPP loan. So you must be operational. If you have if you have an SBA loan on the books, you must be current. So I will say the best advice you can give your clients right now is if they have an SBA loan, there are lots of programs available. Tell them to keep their payments current. Do whatever they have to do to keep the payments current. That will give them a chance to take advantage of these payments being made by the SBA. That will give them a chance to apply for these other programs that are available. Affiliations will be taken into consideration for the size standard testing. So if you do have affiliates, and I will say on round 2, it's 300 employees or less. We have to look at all the affiliates and basically pool your employees and make sure that you have 300 or less employees.
So explain that a little bit further. So what is an affiliation?
Meaning that if I had a business, and I'll go back to the kennel business. I believe, sir, you kennel greyhounds. My dad actually used to kennel hunting dogs. Say I owned both businesses, I would have to look at both companies, and they would be pooled as one for the size standard testing. So I'd have to look at the employees for both and make sure that both of them combined don't exceed 300 employees.
Okay, got it. So what about with a lot of businesses right now that may be evaluating bankruptcy?
Good question. If you are in bankruptcy, you will not qualify for the program. And in fact, I will say up until the day you take funds, you attest that you have not filed for bankruptcy. So if the day that you file for bankruptcy, you become ineligible to receive these funds.
Okay, so it looks as if there were also, you talked about some of the other organizations that are now under it that were not eligible before.
Yeah, so, if you look at round 1, there were a lot of organizations that were allowed, church organizations, schools. There were different things that were allowed that had never been allowed in SBA financing before. In this round, they actually added 501c6 organizations, housing cooperatives, direct marketing organizations. This also includes chambers. The chambers really felt like they were left out in the cold on the last round. They are now allowed to play in the pool now too.
Okay, so what about, how do you know about if you're eligible for a second round of PPP?
Yes, so if you did receive a PPP in round 1, you are still eligible for round 2. You must have experienced a 25% reduction in gross receipts in 2020 relative to 2019. And it can either be an annual look or it can be a quarter over quarter look. And I'll use for example, the business that opened February 15th or February 14th and still gets in under the program, they're obviously going to not be able to have a full year look. You can actually pick a quarter and actually do a quarter over quarter look.
what would that look like for, it's an existing business that's been around for say 5 years. So that means that they would look back from 2019 or 2020 over 2019 at any one quarter, or how does that work? Or is it,
You can look at quarter for seasonality, or you can look at, more than likely for most businesses, it'll be an annual look. That'll be the quickest and easiest. So chances are, you'll look at your 2020 financials, whether it be tax returns or year ends, and you'll compare that to 2019.
Okay.
If you show there's a 25% or greater reduction in revenues, you'll qualify. But it gets trickier when you get into some of the seasonal businesses. Say you're a landscaper, you really may have to look at Q3 over Q3, because that's probably your, or Q2, Q3 over Q2 through Q3, right? Because it's seasonal. So there's some flexibility there in how you look at it.
Okay. What about if there's still remaining funds from the first round that you haven't used?
You do need to use those funds, and you need to attest that you're using them for the purposes of payroll. So that you will be asked to use those funds, and you will be asked how you will use those funds.
Okay.
You don't have to have forgiveness yet, but you do have to have used the funds.
Okay. So I also recall from just seeing notes that there were other expanded criteria about what could be covered beyond just payroll. Can you share about that?
Yep. So now they've actually added operation expenses, property damage costs, supplier costs, worker protection expenditures. You bring workers back to the workplace, and now you've got to have, plexiglass in between desks. You've got, personal protective gear now that you have in the office place. So those are all a part of the added expenses that's qualifying as well.
Okay.
So they've really opened it up.
Okay. What about independent contractors?
So that did not change from round one. So your independent contractor still will apply individually. So again, if you're a contractor that has all 1099 employees, you would apply under your K1 for the business, but your employees will apply under their own 1099 that you provide them.
Okay, awesome. All right, now what about if it's not forgiven? Because I understand that that may be the case with some of the funds.
So yeah, so if any amount that's deemed not forgiven will be termed out over a 5-year period at a 1% interest rate. And so when you sign your loan documents, most banks will probably say, they'll actually almost have you sign it as if you are termed out, because so they don't have to go back and redock it again. But yeah, and it can be that it doesn't have to be an all or nothing decision. It can be that maybe you submit receipts, you submit 941s, you submit these documents, and maybe a portion of it's forgiven and a portion of it's termed out, but it'll be over 5 years at 1%.
Okay, so talk to me about the forgiveness process, because I know that that was updated guidelines were shared with the recent update that came out. So can you share what's the word on that right now?
Probably the biggest change, and I would say that banks are clapping for this and hurraying over this as much as the public is. They raised the cap for the kind of quote unquote automatic forgiveness from $50,000 to $150,000. So if you received a draw in round one that was $75,000 prior to this second CARES Act, or this CARES Act that was just signed into law, you would have had to have gone through a full review by the SBA. You still have to, I want to clarify this with forgiveness though. People think that, oh, well, if it's under 150, I'm just forgiven. No, every bank still has a process. We still have to collect documentation. Anissa, you probably are familiar with this. We still have to send it into the SBA. However, it's a streamlined process under 150 now. So you still have to provide documentation. You still have to attest that the funds were spent accurately, but it's not getting the deep dive look like the deals over 150 are.
Okay. So is there a change in the calculation for the second round or getting PPP now?
There is for certain industries, and I'll use event centers as an example. So it still is, if you look at the calculation, it's your annual payroll. You actually divide it by 12 to come up with your average monthly payroll. Take that times 2.5, and that is your Paycheck Protection funded loan amount. That's what the loan amount is. So the bigger difference is if you are in there are certain, again, industry codes, like I believe restaurants will be one as well, but event centers, I know for sure, they actually get 3.5 times the average monthly uh, expenditures. That they have a higher multiple for this round.
Okay, so we're definitely going to want to check out what that NICS code is, and
Yes,
there could be added benefits depending on if you were in one of those industries that was hardest hit.
yes,
Okay,
yep.
all right. And then talk to me about contributions for group benefits. I know I've got several business owners on the call here that are very generous with how they support
Yep.
their employees.
And that is something that I think a lot of people missed in round one. And that is if you are able to document, and again, a lot of it comes down to how quickly you can gather the information and document it. But if you are making healthcare payments, 401k contributions, if you are making these additional payroll benefits, those are included in this calculation and can be. The quick and easy is that what most people did is they either got a statement from the payroll provider, like Insperity. Insperity provided payroll statements for their clients. We use those to come up with it. But then also, a lot of them would submit their 941s. That's what's submitted to the IRS for your payroll taxes and so forth. But if you want to take the time and document it, you can include these other expenditures into the calculation. They are allowable.
Okay. So what about there was something that you had mentioned about an outstanding amount of EIDL loans made between, explain this just a little bit in your notes, because this looks like there's some dollars involved here.
Okay, so where are we at? What question?
Okay, we're still under the add the outstanding amount of an EIDL made between January 31st, 2020 and April 3rd, 2020.
So yeah, and I got some clarification on that today. What I did learn today, and again, because keep in mind the guidance has come out. I'm actually getting training on this on Friday, so good timing. I haven't been trained on this yet.
Yay! Well, hopefully everybody save up really good questions for Michelle, so that way she can go in and play Stump the Teacher.
Right. But what I did learn was that because I was hunting down this answer myself. What I did learn is that the EIDL loans that you took out previously, what we had to do is we had to actually deduct them from your PPP loan. So if you were to say get an EIDL loan, let's just say, May 15th, but you got your PPP loan, say June 30th, we actually had to deduct that EIDL loan from your PPP loan amount. That has changed on round two. So first, round one EIDL stays with round one PPP, and I learned it does not affect round two PPP. Round two PPP, if you are to get an EIDL loan, it actually will be added to your PPP loan. So what I don't have clarification on yet is, can the whole thing be forgiven? Because that's the way I'm looking at it. And or if not forgiven, do you have to roll the EIDL loan in? So I'm still waiting for clarification on round two EIDL and round two PPP and how those two work together. But I did learn that we won't have to look at if you received an EIDL loan in round one, and that won't affect your eligibility for your loan amount in round two.
Okay, fantastic. All right, so was there anything related to compensation? Because I know I've got some folks on the call that have employees or clients that are making some pretty good money. So I know that there may be, I remember seeing stuff before that had a limit of compensation in
Yeah.
place. Explain that.
So you still do cap your employees at $100,000. So if you're paying somebody $125,000, you cap them at $100,000 divided by 12. That becomes the eligible payroll times 2.5. And
Okay.
so you would actually, and what we found is that a lot of the banks had different spreadsheets. We had one as well where, you would go in and list out all your employees, and then we would cap your employees that were making over. And that includes, your commissions, bonuses, all of that, whatever your total payroll expenses were for that employee.
Okay. All right. So, we've got a good question. Jason. All right. Come on. Share your question, because I'm not even going to attempt to translate because I don't speak banker very well. Michelle did a really good job writing out my questions and my notes here. So
Stump the banker time.
Michelle, I'm not trying to stump you because I don't know the answer to this either, but as you know, a lot of us work in the business acquisition space, and there were still transactions that were happening last year. So let's say you acquire a business at the beginning of 2020 from the former owner. This is an asset purchase, so you've got a restart of all of your EIN numbers. So it's a new corporation that just started. Are they eligible to receive PPP money if technically their start date was, let's just say, January 1st, 2020?
So January 1st of 2020, yes. And in fact, they would have been eligible for PPP round 1. And we funded some people that bought businesses as late as even February, I think it was 20th for round 1. So what I would say is, I would think that you would look at, and this is interesting, you would only have 3 quarters worth of revenue. And I don't know how they're going to do the revenue calculation to show the 25% loss of revenues. Does that make sense?
Yeah, that's what I'm saying. Can you really show a 25% loss in revenue if technically you just started, or just consider a startup? You started a company on January 1st, so you're inside of the period, but you weren't in existence in 2019. So how do you calculate a loss if you had nothing in 2019, so to speak?
Yeah, that's the tough one right there. And I don't know how they're going to do that. And like I said, I know they took it down to even you could just go to 1 quarter over 1 quarter.
Mm-hmm.
The program is supposed to be available until March 31st. Well, that's the end of Q1, right? And then also, people in the business don't believe the funds are going to make it to March 31st. They don't think it's going to be a massive run like it was in round 1 of PPP, but they do believe the money will go quickly, and they do believe that it will be exhausted prior to the end of the program. So that's a great question, Jason. That's what I'm hoping to learn, but I don't have the answer on that one yet. When I get it, though, I will let you know.
You know where to find me.
all right.
I did.
Anissa had a question. Anissa, would you like to unmute and share your question?
Yes, I had two. I want to know, because some businesses, they operated prior to the pandemic, but they didn't have a business account. So they may have commingled with a personal account. Is there anything that could be used in lieu of the February 2020 bank statement to show that they were an entity? And where I'm speaking of businesses that may have business tax returns, but they didn't have a specific business account.
And
Cool.
I'll ask your second question as well. So, but I'll make sure that we pull that one in as well, Anissa. So start
Thank
with
you.
the first one.
I would say, what we did, I'm trying to think what we used in the past, Anissa. I know I went back and I would get the SS4 form to show when they formed, right? When they formed their entity. And that would at least document that we had an entity. And to your point, we did fund into personal accounts if there was no business account available.
Okay.
Obviously there was additional documentation that we did, but I would say that we typically, I know in the past, I would have collected that SS4 form to at least verify that they were a business entity.
Okay, great. Thank you.
Okay, fantastic. All right. So we had another question here. Pat, would you like to share your question?
Yes, all these entities that were never eligible for SBA funding before, churches or nonprofits or farmers. So I've had some questions from these poor landlords. No one's paying any rent. Is there any help in any of these programs for landlords, either on the residential side or on the commercial side?
I don't know, Pat. I will say management companies were included in the last round, but then management companies kind of are a little bit different than a landlord too. So that's a great question. You know, I'll have to look into that and get back with you on that one because I
Okay.
just don't. But I'll bring it up. I'll bring it up when we go through our training.
Okay, thank you.
Yep.
Valerie McCoy, you had a question.
Thank you. I just, and sorry if this is a bit of an overlap, but I just wanted to bring it up really quick. They did an expansion of what would be covered underneath the PPP 2 in round 2. And for example, operational expenditures, softwares, cloud computing, human resources, and accounting needs can be included. Property damage costs, supplier costs, and worker protection expenditures. Just wanted to throw that out there. So
Yeah, Michelle touched on that just a little bit around worker protections and some of that. So, but thank you for expanding the description
sorry
of
if I
that.
missed it.
No, you, because there were some other things that you also brought in as well. So, okay, and then there was a question about the minimum credit score under the PPP and the EIDL programs.
Oh, I don't know. I will say this for PPP, we never pulled credit. So I would say that there is no minimum credit score for PPP. Now, I don't know what was used under the EIDL program because Pat, you might be able to speak more to that than I can. But for PPP, we don't even pull credit. There's no personal guarantee.
Right, and I asked that specific to the EIDL. I know the PPP didn't pull, but the EIDL loan they did. I had some clients that were declined. So I just wanted to know, is there a magic number they're using?
Yeah, I don't know. I mean, you know what I can do, Anissa? I'll reach out to my contact at the SBA and ask him
Okay.
if there was one.
Okay, Mark Steen had a question. Where did Mark go? Do I still have him? There he is.
Yeah, I just wanted to make sure I was mishearing. Is it gross receipts or is it profit that need to be down by 25% to apply?
I think it's gross revenues.
Thank you.
Okay, all right. Any other questions?
Yes, I
Yes.
wanted to know, do we know when it's going to be available for banks yet? Is it a certain date they've provided?
So banks actually are open up today. That's a great question. People thought that the PPP round 1 started on Monday, but it only started on Monday on the community, the CIF community. It was a small group of more minority and rural serving lenders. It opened up to all lenders today. So us at our bank, at First Home Bank, we actually have our clients going through a online portal, and they're able to go in and start applying for loans, and that's this morning. So if you haven't, if you are going to be seeking a PPP loan, you need to be calling your bank immediately, starting the conversation, moving forward. I would say this. I have been recommending my clients go with who they went with for round 1. Your bank already has the information. They'll be able to streamline the process quicker for you. And however, if your bank is not participating in round 2, or if for some reason you don't feel comfortable in moving forward, then you're going to have to go out and start seeking a new banking relationship to move PPP round 2 to.
Thank you.
Even for my bank did close to 9,000 PPP loans at round 1. We have even limited it to our clients and our current PPP clients for this round, just because it was extremely overwhelming to try to meet everyone's, to meet their demands, so to speak. So we may open it up to the general public. But that's only after all of the current served first.
Okay.
Okay, and then Pat had another question regarding EIDL.
I just wanted to be clear. So customers are eligible for another EIDL?
Yes.
And do you know, is the limit still 150,000? Or do you know?
I think it is. But I have to look that up, but I think it is, Pat.
Okay. Wow, that's good. That's good. And then also, just to talk about credit score, based upon what I have seen, and I process a lot of EIDL loans, my gut feel is, generally speaking, 650 seems to be like the cutoff. Anything below that seems to get a lot of turn downs, but above that, they get approved. So, and that's just anecdotal evidence.
That's
Okay,
good.
so we've had a lot of really good information that's been shared. Is there anything else? Because I know I've got a lot of really strong bankers on the group here. Is there anything else that you'd care to share that you've discovered beyond what Michelle has shared? Because she's learning too as we go. And it looks like, okay, wait a minute, Mark had another question. You want to,
Yep,
or share
sure.
your comment?
So Michelle, as you know, a lot of my clients are multipreneurs. They have more than one company. So
Yes.
as we think about the aggregation that they might be processing, is it possible that somebody might have a business that had decreased revenues of 25% and another one of their companies that's thrived and actually had increased in revenues? Are they going to be precluded from applying for the second round?
I don't believe so. And I believe that when we are looking at the size standard test, they are still standalone entities. So, in round one, they would have received a loan for each entity. They still will here as well. Where it's being aggregated is more for that size standard on the number of employees.
Okay, awesome. So we could have somebody that would have a winning and losing enterprises in 2020, and they need to be applying in their losing enterprise.
Yeah. Yep.
Thank you.
Awesome. All right. Well, I will wrap everybody up so that we get us out of here on time today. And I just want to say thank you all very much for taking time out of your day. I know it's crazy. I know everybody's got a lot of things. The plates are spinning. And I want to say thank you to Michelle. I approached her around January 1. Actually, it was January 1. I called her on New Year's Day and said, hey, I want to put out a town hall meeting and just put the information out there to my contacts and on my network, and let's gather a whole bunch of people that can come together and hear about this, because I knew she was going to be digging through trying to see all the updates and everything that was out there. And this information, I know, is very timely, as in, and it's funny, she told me, she said, we're going to have to do this as of this date or later. And we picked this, I think it was the 10th, and we picked this date as being we think we're going to have the information, and it just came out and was finalized within the past few days. So I do want to encourage you to connect with Michelle, reach out to her. Probably the best way is it for someone to contact you via LinkedIn for more questions about this, and to also connect about their eligibility and where and how you can help them. And the thing is understand that you may have a banker that they're just not participating here. So right now, if you only have one banker, you don't have enough bankers. And you really do need access. This is one of the most important assets in your business, and that trusted advisor that you truly need to be leveraging. And I'm so glad that you jumped on. I'm going to be doing several of these, probably at least a couple a month, where we do different town halls and have different conversations. So make sure you stay connected to my profile, because I'm going to be doing a lot of Q&As just so that people hear what's going on. Because right now there's so much misinformation. And I really am honored to have amazing clients and relationships like Michelle that are willing to come and share their insight with us. So thank you so much. I appreciate you doing this for us, Michelle.
Thanks, guys.
Good job, Michelle.
All right. And if anybody has also, if you're focusing on pivoting your sales and marketing effort, I am hosting a webinar on Friday that's talking about how to do a bootstrap branding effort for your business or your personal branding. So jump in on that. It's the Business Unusual webinar series. And right now we have a phenomenal sponsor, the Women's Business Center, but you don't have to be a woman just to participate. It's co-ed, so come on in. There'll be great information.
And I would like to say, Brendan and I go way back, and I was connected to Jason actually, kind of through Brendan as well. So And, I will say that, if there's ever somebody that can help you grow your business, grow your network, make better connections, and maybe I say work smarter, not harder, she's the person to do that. So thank you, Brendan.
Thank you so much. And I will be posting this recording in the group conversation. So give me just a little bit of time to get it uploaded. I'm going to put it on YouTube so that you'll have access to it, and you should be able to get to it pretty easily. It'll take me about 30 minutes before I can get it up there. So just go back to the invitation on LinkedIn and you'll see comments. Make sure you share your information if you're a resource. And we're also going to capture a couple of others, like we'll put AltCap up there. And then I know that there's some other organizations like the SBDC and some of the women's business centers and some of the EDCs in town that are really amazing resources for businesses right now. So we're also going to share that information in the invitation. So thank you all again. I appreciate your participation. And remember, to get what you want, you've got to help others get what they want. Have a great day and good selling all. Bye-bye.